Hey everybody, how we doing out there? Doc Severson with you, ReadySetCrypto, doing the One Bitcoin Club webinar series today. Today's the 3rd of February. How's it going, boys and girls? I'm coming to you today live from Greenville, South Carolina. Would love to know where you guys are coming in from. We have a Butler coming in from Louisiana. Welcome aboard. And let me know what that question is, Butler. Maybe we can capture that at the end of the session today when we do our Q&A session. So we got a lot of people around here today, a lot of people in the room. Welcome aboard. And we got Eduardo in Dallas, Texas. Welcome aboard, Eduardo. And let's see, we got Portugal. We have Egypt coming in. We have deep behind enemy lines in the Republic of California. Hello, Robert. Welcome aboard. Glad to see everybody here today, taking time out of your schedule. India. And I guess that would be in the evening. Serbia. And Carlton from Columbus, Ohio. Hello, Carlton. Hey there, Richard. Austria, Long Island. And we got Rockville, Maryland, South Africa. We have Norsk, Pakistan. We have Ontario, UK, Portugal. All right, fantastic. Thanks, everybody, for checking in, and let's get going. We'll be here at the One Bitcoin Club with ReadySetCrypto and myself, Doc Severson, for probably about the next half hour or so. I like to keep these things nice and tight. All right, let's get started. I'm going to throw myself in the lower left-hand corner and get going here. So today, what do we got to talk about? The One Bitcoin Club webinar series that we do is really my effort to kind of put together the trading related content that we do here at ReadySetCrypto. So if you ask me about what I think about a specific coin, I'm not going to be able to really help you other than just to look at the chart and say, this is what the chart says about it. So I don't have any specific feelings about any assets whatsoever. The chart to me says everything. And that's a message that I think I've been saying to you guys for a long time, and I will continue saying that. Everything in an asset is all baked into the price. So the last few weeks, we've talked about ways to increase your BTC stake, right? We have a bull market. We're breaking out of a 3-year-long bear, and the challenge is always to get on board and increase your stake when it's doing this. So we're looking for landing spots for the pullback. We've talked about using fibs on the swing for doing something like this. Hey guys, welcome aboard. Got a lot of people online. Thanks for checking in. Appreciate it. My name's Doc Severson, and we'll be here for about the next 30 or 40 minutes or so talking about markets. So landing spots on fibs are a very good place to just sit there with a good till cancel limit order and wait to get picked off. Okay, doesn't feel good, but that's what you'll find about most of the best trades is they don't feel good waiting for the freight train to run you over. What we can also do, we talked about this maybe 3-4 weeks ago, is selling cash secured puts. Selling cash secured puts, and if they're physically settled, that means that you can be paid to be assigned. You can be paid for the pullback for this, which I think is one of the most simple, fundamental, genius trades that's out there that very, very few people really understand and take advantage of. So this is truly the professional secret. What we've also talked about is using price action. So get rid of those slow trailing studies that everybody else is using, all those slow stochastics and MACDs and things like that. Use price action. What you'll find is with most professional traders is that you're going to look at them and think that their systems are fairly crude, but the fact is they've been studying price action every single day for years, and they don't need a study to tell them when something is crossing up or things like that. Those are going to be delayed, so using price action is always going to be good. And when the markets get choppy, what you do is you drop down a time frame to trade that chop. Okay? Drop down in time frame, and you'll have plenty of signals to work from. Okay, so this week, I want to give you 10 bedrock rules of advice that you can use to take advantage of the current bull run. They are not going to be trading strategy related. They're not going to be trading strategy related, which may be a disappointment. And it certainly was for me when I was learning about this, because I didn't want to hear some dude talking about the rules of the road and things like that. I wanted to have that person tell us, all right, show us the strategy that's going to make money. And what I realized is, after a couple of years, the strategy to make money is all up here. It's all up in your head, as well, just getting past that little monkey brain that we all are stuffed with, and being able to allow yourself to be profitable. It sounds kind of odd when I put it like that, but you have to set up these bedrock rules. I think you'll understand when I go through these things, and you'll say, okay, that makes more sense. We can always lay strategies on top of everything. Actually, to me, the actual technical strategies are maybe only 5 to 10% of the ability to make profits in a market. The rest of it is up here. All right. And these are not YOLO trading rules. Everybody's like into the YOLO thing, like, hitting up Granny. Hey, Granny, can I borrow $1,000? I want to put everything into this one trade because somebody on Reddit told me to do it. So these rules are targeted for helping you create consistency and confidence to maximize your profits during this bull while not blowing up your account. If you blow up your account, it's like Sisyphus letting the stone roll to the bottom of the hill. You got to roll it back up again. You got to scrounge up some more capital and start all over again. That sucks. Don't do it. I mean, it's sort of a rite of passage, but once you do it once, just pat yourself in the back and say, okay, been there, done that. Now let's get serious about it. So here we go. Using these rules will help you create a business and allow you to stay in the game as long as you want to while everybody else is blowing up. Sometimes these rules are simple to do, and sometimes they're super hard. They're going to take every single bit of your willpower to act on them. Over time, it gets easy. But never forget that it's always your choice to do this. Rule number 1, very simple, hard to do sometimes though. Buy assets that are rising in price. Buy things that are rising in price. If you ask me about a coin, the first thing I'm going to do is to bring up the chart and see whether the chart is going down or whether it's going up. I would say buy things that are rising in price. It's very simple. Why fight it, right? Why fight it? An asset that's rising in price is being accumulated by retail and by institutions. They think that the price will be higher over time. You can do this through trend. I mean, if you understand how to use candlesticks, I mean, obviously this thing is heading higher, right? It's not that hard to look at this and say, all right, this is a trend which is comprised of a series of higher lows and higher highs, higher lows and higher highs, higher lows and then higher highs. That's an uptrend according to Dow theory. So it's actually relatively simple to learn this, but if you still don't get it, that's okay. What you can use is moving averages. A simple moving average like a 200-day moving average will act as a trend mean. Price tends to revert back to the mean. It will eventually oscillate around that 200-day moving average. Goes up and then eventually will come back down, almost like a roaming child coming home again or something like that, right? So the 200-day simple moving average will act as a trend mean. So stick it on there, trade things that are above the 200-day moving average. Okay? Now, the converse of that rule is do not buy assets that are declining in price unless you know something. You know something, right? And not just a feeling, but you actually know something fundamental. Maybe, you're involved with the development of something, you know something about it, maybe it's just not well communicated, or you're 18 years old and you have an extremely long time horizon, so you're willing to get in for cheap right now because you're convinced beyond a shadow of a doubt, and you are, not just somebody else telling you to do this, that it's got potential. So I see just a lot of people buying crap, right? Buying stuff that's rolling around in the gutter, getting dirty in a downtrend just because it's cheap. Don't buy cheap things because cheap things can get even cheaper. What is low can get lower. And that's the truth, guys. I've seen things go to zero before and get delisted, and that sucks. It really does suck when you keep buying down and averaging down into it, and eventually it just rolls off the table. The market does not care about what you think, nor what your desires are. I hate to break it to you, but market is completely ruthless. Price is the only truth that's out there. Don't buy things that are going lower. Now, you could use moving average filtering in this case, like if we've got our 200-day moving average, and in this case, this is Raven Coin versus BTC. And the moment that it starts to break this 200-day moving average, you're like, okay, I'm out of here because I know what's happening. I know what's going to happen here. So don't buy things unless they're above the 200-day moving average. And trending, I would typically say trending on a weekly basis. Weekly uptrend is what I look. Okay? So if you're fundamentally dedicated to an asset over the long haul, then use dollar cost averaging to enter it a piece at a time and average in. So for a lot of people, they were using dollar cost averaging in 2018, 2019, 2020, and they're way ahead of the game now. So they fundamentally believe that Bitcoin was going to turn around, or Ethereum, or whatever asset that you believed in, right? That's fine. I think it's just easier to buy things that are heading higher. Okay, that's the first two rules. Let's go on here. Rule number 3 is fairly simple again, but you're going to have a tough time doing this when you want to chase after something. Place no more than 2% of your capital. I would say, actually, let me qualify this, at risk into any one position. Not just 2%, but 2% at risk into any one position. This is per trade, 2% of your capital at risk. Okay, just little bits of it. Don't, carry around this huge position and boom, throw it on. And, YOLO, man, you only live once, so I'm going to put it all in. Don't put all your chips onto one position. This is how you blow up your account. Break up your capital into small positions and spread them out across different assets, different entries. Try not to concentrate too much capital into one position. Okay, very simple, hard to do. Rule number 4, keep your eyes and ears out of financial press. Keep your eyes and ears out of the financial press. This stuff is like crack, man. It's like whenever you see markets moving around, you want to go out there, you want to have somebody tell you what's happening, but I'm telling you, this will work against you. This will have the absolute opposite impact to what it is that you're trying to accomplish, right? You want news, you want to know why something's moving. Well, guess what? The people that run these sites are not there to help you. You are the product, just like Facebook, right? You're reading articles selected for their ability to attract eyeballs. So we have all this just garbage that's out there, like competing for your attention all the time. Why is Bitcoin crashing? You see a great thumbnail, you see a nice clickbaity title, and you got to click on it and figure out what's going on. It's like eating candy for your brain, like it's endorphins, because you feel like, wow, this is great. I'm getting certainty back. But nothing of this sort has anything to do with what's actually happening. This is all just crap. And what it does is it will give you a cognitive bias. Like you watch something and you say, oh, boy, I appreciate that guy's point, and I understand what he's saying, and all of a sudden you're switched on. What will happen is the reticular activating system in your brain will then lock in on that data point, and it will literally go out there and hunt and seek for things like that. And that's all that you will see. Have you guys ever wanted, like, let's say all of a sudden you got yourself in this frame of mind where you wanted to get a red Toyota Camry for whatever reason, right? All of a sudden you just lock in on that and you say, man, I want to get this red Toyota Camry. This thing looks awesome. And then what do you find? You see them everywhere, don't you? You see them everywhere. And maybe all of a sudden you've decided that you want to ride a motorcycle, and all of a sudden you see them everywhere. Everywhere you look is motorcycles. That's because of your reticular activating system being instructed by the subconscious mind, hey, go out and find me some information on motorcycles. This is why you can hear your name out of a crowd. All of a sudden, oh, is that my name? You can hear that because of your reticular activating system. That's the way that things work like that, right? So if you get cognitive biases like that, you'll only see that viewpoint. You won't see the truth. You won't see any other viewpoints. It's going to be very difficult for you to maintain solvency in any kind of market. Okay. So if you've ever yelled at the market, hey, that's not supposed to happen, then you have a cognitive bias. You have been poisoned, and it's hurting your ability to make money. So ignore the noise, fade the herd. You can't do this if you've been programmed by the trash media. So stay away from that. Yeah, I will read I read one newspaper, and I'm very selective about what I watch on TV. So anything to do with the mainstream media, forget it, because you will be trading along with the herd, and it's going to cost you money. Okay? Rule number 5, look to others for ideas, but don't socialize your trading. So I know that this is kind of a flashpoint here. I'm not trying to combat anybody's religion or anybody's dedication to any forums that are out there or anything like that. Right? This has been a kind of a rough couple of weeks. A lot of these guys have won the battle, but they're losing the war, and that's tough on a lot of people. A lot of people losing a lot of money because they don't understand this rule. They think, that everybody else is going to take care of them, and that's not the way it works in financial market. So I had to learn this the hard way when I started out. You are the one person that has to be accountable for trading decisions. You and you alone. Not somebody else, not some other dude that's got a personality on a forum, right? It's fun to be part of something bigger than yourself, certainly. This is a lot of fun for a lot of people getting involved with something like this, but ultimately it will hurt you if you delegate your decisions to somebody else. You got to make it work for you and not some online entity that may not even have any skin in the game. It's like as yelling as loud as possible, but they put $10 into the trade. Maybe not the 5,000 that you did. Okay, rule number 6. Fundamentals are great, but the only thing that matters is the price. And I've really adopted this attitude since 2013 when the Fed's just been printing money and dollars and dollars and dollars and dollars out there. There is so much liquidity and so much money that's sitting out there rolling down the street, right? It'd be nice to grab a little bit of it, but it's being sucked up into assets right now. So fundamentals don't really matter that much at all. And it is more about kind of what sparks the imagination. And this has been why, like the GameStop and AMC and those kind of things like that, as well as the SPACs that we're trading. So we're trading an awful lot of SPACs that are EV related or green energy related, things like that are capturing a lot of the attention and the imagination. That's where the money's getting sucked into right now. So fundamentals are great, but the only thing that matters is the price. Don't fall for tribalism, false religions. It's funny because we all laugh about it here, the Ripple Army and the Chain Link Marines and things like that. Guys, it's just an asset. It's just an asset. I mean, you don't see that in the stock market. You don't see the Amazon army or something like that. Nobody cares. Nobody gives a shit, right? It's just a stock. It's just an asset. And we need to think the same way with this. It's just an asset. Buy things that go higher. Avoid the stuff that goes lower, right? Don't fall for the tribalism and false religions. You're depending on this asset to rise in value over time. You can't beat it into submission, and you can't flail people in the forum to get it to go, damn it, buy it so it'll go higher. It's not the way that markets work. So the price of the asset contains forward expectations as to its demand and as far as a year out, right? Everything that is known about this asset is baked into the price to this very second. So again, understand that. Like when good news comes out, guess what? Everybody already knew about that good news. It was already baked into the price a long time ago. Okay, so forget about your feelings for something. Trust what the price tells you. Trust what the price tells you. Rule number 7. Find your one thing and specialize. Specialize. Find your one thing. So I go into this really deep in a lot of other topics, right? The old Curly's Law. If you guys have ever seen that movie, City Slickers. So find your one thing and specialize. Hollywood and social media love to propagate this myth that market traders are trading dozens of markets at once. And yeah, I've got some screens here, but it's so I can help do this. And I do trade a few different markets, but really within each market, I'm specializing in one or two things. And this is after doing this for a long, long time, right? So don't feel like you need to go out and get a whole bunch of screens and be trading, everything that walks or crawls, because ultimately what this is going to make you do is, just not have the edge if you don't have that focus, and you'll be a jack of all trades. You'll end up being a master of none. Don't want you to do that, right? Rule number 8, create your plan and work it, man. Create your plan. Oh, the Cotswolds. Thanks for checking in, man. Create your plan and work it. My wife was just out there. Successful trading is all about determining a valid plan and then working that valid plan. Look, we don't get any smarter when we put live capital into the market. In fact, that monkey brain will fight us every step of the way when we have live capital into the market. Human beings are not built for putting risk into the market. Human beings do not manage risk very well. We get this fight or flight response, right? That's baked into our ROM, right? The read-only memory. We're going to give you a fight or flight response. And then if you try to do fight or flight response in a live capital market, you will lose, right? It's the old Ivan Drago thing. You will lose. And everybody's been losing for decades, like in the same way. And you have to think differently about it. So successful trading is all about building a plan when things are quiet, when you're not watching a market, and then telling yourself, almost programming yourself how you're going to act depending on what happens. Very, very important. So you know what they say, if you fail to plan, then plan to fail. Plan to fail. Okay, buzzing right through these. Rule number 9, and then I'll take some questions here once we get through this. Seek incremental improvement. Seek incremental improvement. Now, what I mean by that is a lot of people think that, when you learn about something, you get involved with something, and, the next day, boom, all of a sudden you're a master, you're an expert. It doesn't work that way. It's about getting better incrementally. You don't learn about something on Wednesday and master it by Thursday. That is not going to happen to you. It takes a lot of reps. It takes a lot of iteration. It takes a lot of internalizing a strategy. So basically what you're doing is you're taking it from somebody else and you're teaching your brain to accept it. You're teaching your brain to say, hey, we borrowed this, but it's ours now. We've worked on it so much. So seek to get 1% better at something every day. This is something that I had borrowed from a friend of mine, James Clear. And if you just get 1% better every single day at something, just a little bit. I mean, can you do that? Can you get 1% better by tomorrow on something? Just pick any topic and say, I want to get 1% better at that. Of course you can. But then the thing is, do it again. Do it again, do it again, do it again the next day. Do it again the next day. Get 1% better and you'll be 37 times better at something by the end of the year. This is the way that human performance is done. It's not a step function. It's not a, hey, I'm going to read about this thing on Friday and by Monday I'm going to be trading it in the live market and retired. It doesn't work that way. It takes a long time to work towards something. People that have a plan can shorten that time. Absolutely, I've seen that happen. Rule number 10, and then we're going to wrap things up here. You are a work in progress. Never stop learning and adapting to the challenge. The markets are always different. When I broke into this business 16 years ago, markets are nowhere near at all like what they are now. The cryptocurrency markets are way different than the equity markets, are way different than the futures markets. Everything's different, but it's all changing at the same time. If I was just static, I would no longer be in business. If I said, hey, I've learned everything there is to know, and I've passed all the certification boards and tests, like an accounting certification or something like that, or some kind of IT certification, And this is what a lot of people do. A lot of people pull this crap and say, hey, I've already learned everything there is to know. Okay, congratulations. Then you should not be trading, because markets change their stripes all the time. And it's almost a psychological challenge to identify what it is that character, that change in mood that's happening in the market, and then be able to apply the right strategy, the right analysis to it to figure out how to take edge from that market. So you are a work in progress, and so are the markets. Never stop learning and adapting to the challenge. Be targeted about this. So figure out what you want. Specialize in one thing. Most people are not like this at all. They don't know what they want. They're not targeted. They're looking at one thing. You know, they're doing something like this. Hey, I'm going to work on this. And then the next weekend they're working on something else. And then, hey, look at this bright, shiny object over here. And then we're just bouncing all over the place like this. This is what most traders do. Hey, I'm going to try this strategy, and then this one, and then this one, and then this one. So instead of 5 years of experience, you get 1 year of experience 5 different times. And that is not the recipe towards long-term success. So determine your knowledge gaps. Like, you know, be the big person here to say, look, I've got some gaps. I've got gaps to fill, and I'm going to go out there and fill them. I do this all the time. I have plenty of knowledge gaps that I'm working on. I've got a plan up on my board over here that shows what my plan is for this year and how I'm going to go about doing it. This process never ends, guys. I hate to break it to you, but this is, if you're going to do this for a living, this is a lifelong thing. But even if you don't trade for a living, anything that you do is like this. This is really no different than if you're going to be an expert in, you know, cycling, or if you're going to be an expert in basket weaving, or whatever you want to pick. It's the same thing. Okay, so those are my 10 rules for you to master this bull market. I could probably come up with another 50, but those are the ones that I think that you need to really apply yourself to right now. You can. And then you'll be able to accept the opportunity when it comes to you. Okay? So probably not what you're expecting, but you will not master this bull market without being well-grounded in these 10 principles. Okay, so time for Q&A, but before I do that, if you're into trading markets, I want to encourage you guys to join us, because we have a number of outlets where we try to provide value to people on a daily basis. So one of the new ones that we have here is the Ready Set Trade service. So get on for free, join our tribe. Join our 10X tribe for free that's out there. If you go out to elite.readyset.trade, you'll see this exact web page. And you can just go out there to join us, and it doesn't cost anything. We are not going to spam you. We just want you to join on board and join our community, because together we're a lot better. Okay, that's number one. Number two is the Ready Set Vision, which is a brand new thing that our Checkmate and Mav have put together, which is on-chain analysis for crypto. So check it out, ReadySet.vision. There is nothing else like this out there on the planet right now. And then lastly, if you do want to join us in Omnia. So Omnia, this is our 3-month special. Normally, if you go out to the website, it's $79 for a month, but you can get 16% off of that if you sign up for 3 months. And I guarantee you that 3 months later, you will still be digging through all the gold mine of information that we have out there, the number of classes that we have, as well as the daily newsletter, the community, and the live webinars that we do. So join our Omnia service for 16% off at ReadySetCrypto.com/3. The word 3. THREE. Okay, so with that, guys, I will yield. We're right on time. I will yield to your questions, and let me know if you have anything that you want to bring up. And let's see. Okay, so there's a question here by Jesper. How about the crypto channels here on YouTube? I would say that's fine. I would be very particular about the crypto channels anywhere. So any free information is great, but look at the actual person doing it. Do they have experience doing this? Are they entertainers or are they educators? Are they people that have been in the pits and trading things and know what they're talking about? Or is this something where they're just regurgitating the same crap and the same information everybody else is, and they've got a pretty green screen behind them and they look cool? That you have to decide for yourself. Okay, let's see. Who else has got a question here? I love that, Greg. If you fail once, you're a novice. If you fail several times, you're a pro. Absolutely. I'm trying to think of the Churchill quote. It's like a successful person is able to fail many times without losing enthusiasm. Something to do with that. I'll see if I can think of that later on. No copy trade platforms. No copy trade platforms. Although at ReadySet.trade, we do publish every trade that we take real time. Okay, so Jules, I'm trying to read through your question here. If you're 2K below the mark price and profit already, but have a small position, I'm having a difficult time trying to figure out. If you wouldn't mind emailing me your question, because it seems like it's a little bit longer than I can answer here. So just shoot me an email at doc@readyset.trade. Be happy to answer it for you. How do I feel about liquidity pools? I really have no trouble with that. A lot of people have a lot of trouble with things like high frequency trading and dark pools and stuff like that. And I really don't, because ultimately liquidity is a good thing. I don't have a problem with that. For some reason, the press has a problem with it. Oh, they're stepping in front of the retail trader. Oh, that's a horrible thing. No, it's not. The worst thing on the planet is when you have an illiquid market. It is truly called a roach motel, because you can get into the trade and then you can't get out of it. And that's the worst thing on the planet. So I don't know what that was. That's exciting. Okay, let's see. Next question. Where's Mav? He's like 10 feet over that way right now. Are there any signals to know if a market has hit a top? That's a great question, Rashid. Oh my gosh. I have talked about this topic a lot over the last year or so, and I'll tell you what, to me, the most difficult signal that's out there is identifying a topping signal, because they're all different. Now, usually what I look at is when we have a topping signal, the first thing that normally, I'm sorry about all these noises and all this crap that's happening in the background, that's our platform. I think people are doing it intentionally, is what I call a shot over the bow. So markets that go completely parabolic, a lot of times when they're about to lose it to the downside, you'll see a shot over the bow followed by a lower high, and this is where the shit really hits the fan. Okay, so that lower high, the shot over the bow, the lower high, and then that's it right there. So it's a transition from quiet and trending to sideways and volatile market character, and we never really do know whether or not that's going to recover back up to the upside. It could recover back up to the upside, or it can just completely lose it right there, and this is what happened in March in most of the markets. Okay, so the topping signal is the very toughest one that's out there. The bottoming signal, ironically, is actually much easier to analyze, because the divergences are so much stronger in that type of signal. Okay, let's see. How to find a good crypto accountant or advisor in the UK? Gosh, I don't know. I do not. Richard, I appreciate the honesty of your question. And I really wish I had something better for you, because I don't want to know anything about taxes. I hate taxes. I hate the whole topic about taxes. I hate everything to do with taxes. And I'm just so locked in on that viewpoint that I delegate everything to somebody else, and I pay them ridiculous sums of money, and I just don't want anything to do with it. When I first got involved with investing, one of the big things was, if you're going to be a professional trader, you got to incorporate yourself in Nevada. You have to form a Nevada LLC and run an S corp, and so I ran around like an idiot and spent all of this time building corporate shelters and sending away for programs and reading books on this stuff. And at the end of 6 months, I had gone nowhere on it, and really somebody said something genius to me, like, look, dude, why don't you go create a tax problem first of all? Go create so much revenue that you've got an actual tax problem, and then you can hire somebody else to solve it. And I've never forgotten that piece of advice, and I just don't want anything to do with those. And I don't want to get into trouble giving anybody tax advice anyway, so. How is ReadySetVision different from Glassnode? I do not know the answer to that question. Jules, I don't know what your question is at 12:25. I'll tell you, Jules, this is so technical. I don't think I can answer it here in this type of forum. I would love to give you the courtesy of an answer, but it requires a little bit more discussion on something like that to understand. So right now we're going through kind of a rapid fire question and answer session, and it's going to take me probably something like 10 to 15 minutes to truly answer that. So probably not the right forum for this. But please reach out to me in email, and I'll get you involved in a dialogue for that. How do I feel about Wall Street bets? Guys, look, I was excited last week when I saw Wall Street bets. I said this last week, David is 1-0 over Goliath. And then Goliath came back this week and absolutely kicked David's ass, right? And you should expect that over time, Goliath will kick David's ass, because Wall Street bets is filled with a lot of personalities, a lot of people. There are some people that know what the hell they're doing in there, but generally they're the quiet ones. The people that don't know what they're doing are the loud ones, and they're yelling at everybody like, you've got to hold. And it's like, guys, I don't want to get in trouble here, but this is why communism does not work, because ultimately people will revert to taking care of themselves. They will protect their own interests. So, somebody selling into the spike, that's exactly what I would do. I'm not there to put some hedge fund out of business. It's a free and open market, right? Okay, they're the bad guys, and I don't really appreciate what they do, but I'm, this is the point where it becomes religion and tribalism, and I think you have to be very careful there. You have to take care of yourself. Right? Nobody else is going to take care of you in a free market. So I love the forum. I think it's great. I think it's a great resource, but I think you have to be so careful about what you do. Let's see. DeFi Dad, what do I think about the silver market situation? Will this possibly help the crypto? Look, we just had a 1 or 2 day anomaly in silver. I don't think really any. It's such a big market. You can't manipulate silver. It is silver and gold are huge, and it's just not going to happen. I don't care what anybody says. And plus, I think Wall Street bets are not after them. I think that was a PR thing that was out there. Okay, so yeah, Mav is in here answering questions about ReadySetVision. Thanks, Mav. Okay, Jake. You talked about specializing in your 10 things to know. How do you feeling about having at least one asset in DeFi, derivatives, storage, etc.? Should you specialize? Well, look, if you want to get going in something, okay, most people that I see are having trouble because they try this, they try a couple of trades in this, and it doesn't work out. So they say, well, shit, I'm going to try this over here. And if that doesn't work out, then they say, well, I'm going to try this over here. And we just end up going in this big circle of just trying different things all the time. Here would be my advice on that is like focus on just getting one thing going, get that thing off the ground, get some altitude, get that thing to rotate off the runway and, get 1,000 feet of space underneath you, get yourself into a pattern where you're consistent with it and it's working for you. Then you can start working on something else using the same principles because the same principles will apply. But I would say if you're it depends on your situation there. It depends on your situation, Jake. If you got a lot of things going and they're going great, then it's okay. It's okay to diversify a little bit. But if you're having trouble getting started, if you keep rolling the stone up the hill and it keeps falling back down, roll the stone up the hill, falls back down, then specialize in one thing. And don't stop until you master it. And then you can bolt on something else if you want to after that. Hopefully that makes sense. Okay, so Carlos, let's see, Wall Street bets, then a pointless pump and dump of Doge. Yeah. See, here's the problem, guys. Look at what happened with Wall Street bets. Hey, we just kicked, Melvin Capital's ass. Let's go get AMC. Let's go get silver. Let's go get Dogecoin. What did they do? They spread themselves out too thin. You can't move more than one market at a time. I'm sorry, but even a big retail firm like that is not going to move. And only if it's like super illiquid, super thin, you can move that market temporarily. But then just like a vacuum, right? All the hedgies are going to run in and beat it down, right? We've been watching that with crypto for the last 3 years. Back in September, thanks, Richard. Back in September, the CFTC slapped a $920 million fine and restitution on JP Morgan for manipulating gold. Gold is like the most difficult flipping market that I've ever traded. I find it impossible to trade gold. Seriously, it's the most vindictive instrument I've ever traded in my life. Like you take a breakout and it'll reach down and slap you out and then we'll take off without you. I mean, it is just wicked. So I wouldn't doubt that for a second. It's just hell to trade. Okay, cool. Hey guys, it looks like we're just about done. If there's anything else you guys have questions about, please, you can reach out to me at doc@readyset.trade, or you can reach out to us here at support@readysetcrypto.com. And yeah, Peter Schiff's laugh. So thanks everybody for hanging out with us today. And I really appreciate your time and your questions. And like I said, if there's something that you asked I didn't address, reach out to me offline. I'll be happy to establish a conversation with you guys. Thanks, everybody. You guys take care. Have yourself a great week, and we will see you mañana. See you next week. Take care.